Really, we see businesses who are both senders of payments as well as receivers of payments getting benefits in two key areas. One is the timeliness of the payment availability, right? Where in most cases today, settlements are 2 to 3 days. Getting instant access to the funds helps from a working capital perspective. And then second, the data that comes along with the real-time payments allows for faster reconciliation. So instead of having a payment and a file or an email that you need to go reconcile, all of it happens through an automated process. We're seeing a lot of early adopters in just a handful of spaces. One is around people that need to pay money out. So whether it's around an earned wage access, whether it's a wallet provider that offers a client an opportunity to get their payment faster through real-time payments. We're also seeing a number of banks start to use this for having money movement account to account or funding a new account. Actually, the highest volume on the network right now is for me-to-me transactions to fund a brokerage account. We're seeing a lot of good traction there, and it's actually helped a lot because in a brokerage situation, you can talk to your advisor, you can get a new strategy in place, and then you can fund and execute it in the same day instead of what used to take a couple days. We're still in the early days in the United States for real-time payment adoption. We're seeing that in many cases, the balance of how many corporates are ready to send the payment, meaning they're integrated in their enterprise resource planning systems, the banks that they're working with have integrated, and that the people that they're sending money to or receiving money from are enabled. So because the network's young, we're seeing early trials and we're starting to see signs of real scale. The second thing that we're looking at is around the biller's adoption. And in many cases, corporate has to integrate with a number of systems that they have. And then the number of systems they integrate has to be available 24/7, the same way that the real-time payments network needs to work. So that's caused, I would say, some delays in how the data gets mapped, how we work with enterprise resource platforms like Oracle, SAP, and others. But we're starting to see more and more progress along that path. I'm most excited by the opportunity to connect or build bridges between existing domestic real-time payment networks to enable instant cross-border payments. And if you think about it, each network that's built today has their own bank-grade security, know your customer. They have really fast and final settlement. Once we can create the right type of governance and rules and regulations, the technology, the underlying technology to work with the ISO formatting is there. So imagine if we're sending money between the US and Europe or the US and India, and you could utilize the directory service, right? So maybe in India it would be UPI, in the United States it might be something like Zelle someday, and you would only have to enter a phone number and email of someone that you're sending money to, so that then they could use the domestic network's way to verify who you are and what bank account to send that to, and then you could initiate that payment. And you'd still have FX and other standard currency changes, but the ability to move and settle funds instantly across borders is really technically feasible. I think it's now working more on how do we align those rules, regulations. Is it between two banks? Is it between two networks? And obviously there's a lot of work to do to get that right. But particularly for low value, high volume payments, that I'm really excited about what connecting these real-time payment networks could look like. I think there are 3 lessons learned so far. I'm sure there'll be more. I think the first is around resiliency. There are very few bank systems that were built to operate 24/7. And connecting to a new network when you're not sure when you're going to receive a payment, but you have an obligation to post it, really raises the bar. We're on a multi-year journey in order to figure out how can we achieve that goal. I think that many of us as banks are on that journey together with our clients. The second is around data, and I mentioned it before, where if I'm a business and I want to start to send, let's say, invoices and a request for payment from a corporate to a small business or vice versa, how I get the data required for the invoice reference information, the payment amount into, let's say, a request for payment on the real-time payment network is very different than the existing invoicing capabilities today, that you can pay with an ACH, you can pay with a wire, you can pay with a virtual card. So figuring out how we get to that data, and there have been some very successful pilots, so I'm encouraged by it, but I think getting the data right is going to continue to be important. And then last but not least, I mentioned earlier the client experience around how a consumer now can authorize a payment. In some cases, the real-time payment network is really helping settlement that is away from the user experience. So as an example, we actually use the real-time payment network to settle a good portion of our Zelle transactions with other participating banks. But where a client does have to do a credit authorization and they have to take that step in their banking application, that's going to require some training.